Hey guys, David Robinson here. Welcome to the apartment investing journey. Excited for our episode today. I've got an individual that has a great story coming from the medical industry, medical field, and transitioning to full-time, I think full-time, we'll find out here in a minute, real estate investing and development. And so Sumeet, Makhijani, welcome to the show. I appreciate you coming on.
Thank you so much for having me, David. Great to be here.
Yeah, my pleasure. So, Sumeet was born and raised in Chattanooga, Tennessee. He became a plastic surgeon before starting in commercial real estate as a passive investor. He then transitioned to active investing about 5 years ago, all while working full time. He and his partner founded Easy Living Communities to acquire and operate mobile home parks. And so, Sumeet, we want to understand this progression and this journey that you've been on personally. Um, Very, very demanding educational background to get into the medical field, to become a plastic surgeon, and then exiting what many people dream of doing and getting into the real estate business. So if we can, let's back up and just talk to us about the journey that you've been on, and how you got introduced to the real estate world.
Sure. Thanks. Thanks again for having me on. My story is somewhat unique, but maybe relatable to some others who listen to your show. But again, I was born in Tennessee, like you mentioned. My parents were professionals. My mother was a chemist, father was an engineer, but they had a career change kind of midlife as well. And they both went into residential real estate, became real estate agents. So I kind of grew up around residential real estate my whole, childhood. I was going to open houses. I was signing contracts with clients with my mom. That's how I got to spend time with my parents, was just being with them doing those things, because otherwise they were so busy. They didn't have much time to spend with me otherwise. So I was in the car, in the back seat, just listening to conversations with clients and going to different homes and things of that nature. So that was my introduction to real estate, was through my parents primarily, but it was a very residential kind of experience. When I was a kid, I grew up thinking I always wanted to be a doctor. That was my goal. My hero was my pediatrician. And I thought I want to be a pediatrician when I grow up. And then I went to medical school with that intention, did one pediatric rotation and changed my mind completely after that. Realized I didn't really have the patience to be a pediatrician. I liked getting communication with patients, and kids, crying doesn't really do that for me. So I switched gears in medical school, found a passion in plastic surgery, spent a very influential summer doing reconstructive plastic surgery at MD Anderson Cancer Center in Houston, and had great mentorship there. And that was what really spurred me to become a plastic surgeon. So did a 6-year residency in plastic surgery in New York and finished that, and then immediately started working. And I've been in my current job for 10 years. But I always had this real estate bug in the back of my mind, thinking about my parents and what they were doing. And my parents had a small single family home portfolio. And, I kind of knew about that a little bit, saw how that had been successful for them. So I was always wanting to get into real estate. And a lot of the doctors I knew were making money outside of medicine. That was where they made the majority of their money. Actually, it was not working day to day, but working in, in other careers or fields, or in real estate in general was a big part of that. So I knew I wanted to get into real estate. So about 5 years ago, got real serious about it. I decided to go back to school again. I'd gone through a lot of school already, and residency for 6 years, and went back to school for 2 more years, did a
Wow.
online master's in real estate because I wanted to have more background. I guess I loved being in debt. So I thought, let me get some more education. But I grew up in an educational kind of world. I was always in school. From the day I was 22, went to college at 18, went to medical school at 22, started my residency at 26. And so I did this kind of online master's through Georgetown, and shout out to them. And, did that for 2 years. And while I was working full time, I was, doing my classes, nights and weekends, studying and doing all that. So got my master's degree for a couple purposes. One was to kind of educate myself on commercial real estate and development. That's what that degree was focused towards, because I really didn't have any experience in it. But also I knew one day if I came to investors and I said, here, I'm a plastic surgeon investing in mobile home parks or apartments or whatever, they'd say, well, what do you know about anything?
Right.
And so I said, well, I've got this master's degree, and it did prepare me in many ways for what I'm doing now. And so I wanted to have that kind of, validity to our investors moving forward. So that was kind of two of my main purposes in getting that master's degree. So, I got that degree, I finished that, and immediately jumped into apartments and multifamily development. So I kind of jumped in on the deep end. I mean, I didn't, a lot of people start about, getting a single family home or a duplex, triplex, working their way up to a small multi. And I immediately jumped into multi-development, which is, a whole nother conversation for, we could have. But basically that was my first project, was a 96 unit apartment development with a couple of partners in Omaha. And that was, a 4-year process. Pre-development, development, actually getting the C of O in September of this year. So in September, nice. We'll get our final C of O, but that's been a 4-year process. Loved apartment development, but as you know, there's a lot of risk and uncertainty when you're doing multi-development, and you kind of want to have one ready to go after the other, which is also somewhat challenging. So transitioned from that, focus to mobile home parks. And so that's kind of where our business is now. I've got a partner, VJ. We've been friends for 10 years and partners for the last 5. And, that's our business now, is owning and operating mobile home parks, primarily in the Midwest and Southeast.
Perfect. Well, thank you for giving us some background and sort of this journey that you've been on. I'm curious, I want to back up to a couple different points. Sure. First off, I want to understand a little bit more about what goes on in the medical. You mentioned that doctors made, you noticed that a lot of the doctors that you rubbed shoulders with made a significant portion of their money outside of the field that they practiced in.
Yeah.
So what goes on? I'm sure there's a lot of conversation and discussion, but what's happening in that field that causes doctors, high-paying physicians, to pursue another path? Help us to understand that.
Yeah, I mean, I think my introduction to doctors making money outside of medicine was when I was growing up. I mean, my parents rubbed shoulders with I'm Indian, parents came from India, and all the other Indian families they were rubbing shoulders with in Tennessee were all physicians. And one of the first things I kind of learned was that they were investing in hotel developments. And there was a sponsor in Chattanooga, is still there. And, all the doctors were investing with him, getting amazing returns. Hotel, this is like in the 80s, 90s. Hotels were, in 2000s, they were building them, faster than they could go, and going on throughout the Southeast. So these doctors were making tremendous amount of money just passively investing in this case, hotels. But I knew personally other doctors as I was going up in my career, through medical school, residency, and now, in practice, and they were making a lot of money in apartments or retail, or, I had one of my partners had a radio station. I mean, just all kinds of random things. So I knew that there was money to be made. And I think people have an impression of doctors that they're just running around with tons of cash everywhere. Mm-hmm. But a lot of doctors don't make as much as people think. I mean, I know a lot of service type industries where they're making a lot more than the doctors. I mean, we deal with electricians and plumbers and landscapers and tree service people, and they've got good businesses and making in a lot of cases more than a lot of the doctors I know. So I think this impression that doctors are just rolling in cash is somewhat a fallacy. There are some doctors who do very, very well, but they're highly specialized in a specific field. But if you're talking about your family doctor, your pediatrician, they might be making $100,000 or $2,000 a year. I mean, it's not crazy money. So I think what a lot of doctors are looking for is an opportunity to either get into something where they can make additional money outside of their career, or they're looking for a way to scale back in what they're doing, because you may or may not know this, but I know you mentioned you have family members in the medical field, but there's a high rate of burnout in medicine. I was partially burned out. I mean, that's kind of one of the reasons I got into real estate too, is that you've got doctors who may not be making a lot, but are working a lot of hours, who maybe want a little bit of extra income passively and some actively. And then you've got an issue with burnout where maybe they're trying to, scale back their own practice. So.
Yeah, I love that. And I appreciate you shedding some light on what that industry looks like. And it makes a lot of sense why, physicians would look to outside sources to sort of grow their wealth. I think taking that, $100,000-$200,000 may not be, enough to immediately change your life, but
right.
using that money and deploying it in other areas can potentially.
Right.
Yeah. So I also want to discuss, once you decided that real estate was something that you wanted to get involved in, you took what I would consider a little bit of an unconventional path in that here you are, a plastic surgeon, and you decide to go get your, master's in real estate development. Sure. As if you weren't already busy enough, here you are, going back to school, getting a master's in real estate development.
Sure.
And I understand the thought process behind that, which was, once I get into real estate more fully, I want to be able to turn back to some education that I received so that my investors can feel confident that I know what I'm doing. Right. So I understand that thought process. I'm curious, once you went through school, they focus in real estate development or in your master's program on multifamily development for the most part, correct?
Yeah, absolutely.
And so I understand that you went into, that 96 unit development, Omaha, and it is a long process. There's a 4-year process for you to be exact. I'm curious though about your thought process about getting into mobile home parks and how you were introduced to that. And I want to maybe have a little bit of a discussion around your thoughts on multifamily versus, what you're currently pursuing, which is mobile home parks. Just chat with us in general about that.
Yeah. So my partner, as I mentioned, VJ, had worked in a lot of different arenas, including development, and he worked at HFF, a big debt intermediary, and had exposure to mobile home parks about 10 years ago, really liked the space, called me and said, hey, we should look into mobile home parks. I said, I don't know anything about mobile home parks. I probably have the same impression of mobile home parks as everybody else who hears the word mobile home parks, which is not a preferably positive one. So I said, well, let me look into it. He said, well, I just did this boot camp, and he did it like a weekend type boot camp with the guy many people learn from. And I did the boot camp as well shortly thereafter. And I think it was an industry that he felt, and I now believe, isn't as obviously consolidated as the apartment industry. And there's still a long runway to go. And so we kind of felt that we did that development together. It was great, but a long process, like I mentioned. There's a lot of risk. You have to hope at the end of the day somebody wants to rent that apartment building. You have to go through the recourse debt on a property like that, and guaranteeing things, in the millions and millions of dollars. So it became one of those deals where we thought, let's transition. We did love apartments, but heavy competition, even in like the type Class B or Class C type space. And so we thought, let's try, mobile home parks. Doesn't seem like there's as many players. We could maybe get in a little bit easier than we could in apartments. And it seemed like a long runway. It was an industry that hasn't consolidated tremendously. We thought there was opportunity there.
And so when did you start focusing on mobile home parks? Obviously, you got started and spent 4 years on the multifamily development deal in Omaha, but I'm assuming that at some point in time, you started to shift your focus to mobile home parks. When was that?
Yeah, so VJ did his boot camp summer of last year, 2020, and we closed our first deal in November 2020.
Oh, great.
So we're now 5 parks in, got a 6 under contract. So we're expanding that part of our business pretty rapidly. I think we're up to about 265 lots, and growing as we speak. That's
great. So maybe if we can, let's talk a little bit about sourcing mobile home park deals. That we've talked extensively on our podcast about sourcing multifamily deals. Is there anything unique about sourcing mobile home park deals?
Yeah, I think a lot of the same, things are in play that are in multi. We have, I think, probably a little bit fortunate, have come across some good deals through brokers.
Hmm.
But I have to say that the majority of deals in mobile home parks are off market. So I think probably a little more than multi, certainly more than like single family homes or things of that nature. It's a lot of off market volume. So if we've talked to all the big brokers in the space, we've formed relationships with them. One of the biggest brokers in the space did 40 deals last year. He said 38 were off market.
Hmm.
So you're looking at heavy volume off market deals. So I think that's probably one of the biggest differences maybe compared to other asset classes. But I know that's true in multi. I mean, so much of that is the same situation. And I failed to mention when I first started the podcast that my first deal in multi wasn't actually development, but it was a passive investment I did.
Oh, that's right.
And so I did a passive investment, and speaking with that sponsor who I've had connection with for many years now, he tells me the same thing, that many of his deals are through brokers, but they come to him first because they know he can close the deal and he's legitimate. He's got the capital. So
yeah. And so just to clarify, when you reference off-market deals in the mobile home park space, it seems as though that these are broker represented deals, but aren't actively marketed to the public. Is that correct?
Exactly. I'll give you a good example. Our first deal was in Omaha with a broker who we had a relationship with for many, many years because we were in that Omaha market quite heavily. So we knew him, and we were just telling him right off the bat, this is what we're getting into. We're getting into mobile home parks. He goes, I have my first mobile home park deal, and I haven't marketed it. I've been in commercial real estate for 30 years. He was with Berkshire Hathaway Commercial and had a long, extensive career in commercial real estate, but this is his first mobile home park deal. And he brought it to us first because we knew him, and the timing was just right. And we closed that deal. And, that's looking like a tremendous asset for us. But, that's how it goes. You have these relationships, these brokers, they kind of know what you're looking for, how much capital you're looking to allocate, what markets you're looking at. And they kind of, present it to you off market. I will say also these brokers, there's probably not as many mobile home park major brokers as there are in multi family. I would say, we kind of know all of them, and there's probably like 30 to 40 major brokers that are in this space. So that's kind of another thing, is that they have to get to know you, get to know them, but it's kind of an intimate circle. It's not like there's 500 mobile home park brokers or 1,000 mobile home park brokers. It just doesn't exist. You see kind of the same, ones over and over again.
Got it. And as it relates to sort of the business plan and what you're focused on, are these value add opportunities where you plan on going in, increasing value in a handful of different ways, and either refinancing in 3 to 5 years or selling in 3 to 5 years? Is it a similar type business model?
So it is a similar business model, and you are trying to add value. The way we add value in the mobile home park space is a little different than in apartments. So one of the things that is well known in our industry is that mobile home park lot rents are very low compared to what they probably should be. The average mobile home park lot rent around the country is around $300. And, using inflationary kind of pricing, it should be closer to $500 in today's market, the average. So we see, again, that delta, about $200 of runway that can go up in this industry as we move forward. So increasing lot rents is certainly something that is part of the value add plan. But also a lot of these parks are typically owned by mom and pops who haven't either raised rents, or they're paying the manager, way too much money, or they're doing all the work themselves and not running it professionally. When we got into this business, we didn't know anything about software or technology or any of that, but it is such a big player, just like it is in apartments. We're seeing so much of that in our field as well. So, in multifamily, they use, all this technology and software, AppFolio and such. We use, Rent Manager as our software, but, there's so many different things you can do in your software programs to make it more professional.
so that you're not sitting there with an Excel sheet every month, saying, oh, this guy paid this much and this guy paid that much. So, and we can reach out to tenants that way. We can follow leads. We can, send invoices. We can do all kinds of things through our software. And mom and pop traditionally haven't been doing that. So we try to run a much more efficient type property, which again decreases your expenses, increases your NOI. So we're doing things like that. Another thing in the mobile home park space is there's often these parks that are either the homes are all owned by the tenants, or the homes are all owned by the parks. So we prefer to just be landowners. We don't really want to be homeowners. So what we've done in our park, the most recent park, is we're trying to transition all these park-owned homes to tenant-owned homes. So that's another way that you can make money in the mobile home park space, is you just become a land renter.
And as it relates to helping you, what would be tenants, transition to ownership of these homes, do you guide them on that? Do you just encourage it? Do you bring in a third party lender that helps with the financing on those type of projects? What does that look like for you?
Yeah, it can be any of those situations. So if you're dealing with really old homes that don't have a lot of value, I mean, these mobile homes typically are like cars; they depreciate over time. So when you're looking at an old home, it may not have much value, maybe a few $1,000 to $5,000, maybe even less than that. So in those cases, you're better off just gifting the homes to the tenants and just collecting lot rent. So you kind of transition the model. In a newer home that may have value that you do own, we do have third-party lenders that are in the space. There's not a ton of them, but there's a few. And they do provide financing. We don't provide any personal, as the owners, we don't provide any personal financing. But there are, third-party people out there who do the financing for people with, 5 to 10% down, reasonable interest rates, reasonable terms, that kind of thing.
That makes a lot of sense. Okay. So outside, so would you argue then that where the most value is added is through more professional operations and management? Is that where you add the most value to your communities?
I think that's one of the biggest things, but we also, we do raise rents, in a staggered type, reasonable fashion. We've gotten to markets where, our first park we bought, the lot rent was $350, the market was $525, so we don't go from $350 to $525 the next year. We stagger that and go in kind of a reasonable fashion, so that tenants aren't really getting that sticker shock, day one when we take over the park. But yeah, we have a long-term outlook. And you asked me earlier, we're looking to sell these or turn these over. All our investors are long-term holders, just, with that mentality, just like us. We haven't sold anything, don't plan on selling anything, just plan on holding these properties long-term. Most of our investors are around our age, so they have, a 20 or 30 year outlook. They're not looking to turn and burn things in a few years. So we tell our investors that, our goal is cash flow. We eventually will refinance a property when it makes sense. But, our goal is to hold these properties for decades, make them kind of generational wealth type assets.
And just to give our listeners some context, what type of return profile should an investor expect in the type of project that you're pursuing?
Yeah, so I know IRRs are very common in the industry to, present to investors, and we kind of are a little bit different in that way. We don't necessarily focus on the IRR because we don't necessarily know our hold times. We can say, okay, hold it for 5 years or 10 years. We can make something up theoretically on paper, but what we focus on is our cash on cash returns. When we take over a property, we expect low teens cash on cash returns, and if we can get things moving in the first couple of years the way we want, we're at about 20% cash on cash return annually. So, and that includes the loan pay down, of course. We do that as part of our returns, but that's our goal, is about 20% cash on cash return, and we feel like we can get that.
Wow. Yeah, that's fantastic. Yeah. And if you're okay with it, maybe just take a minute and describe your typical project. I know you closed on 5, you have 1 more under contract. I mean, what are you typically pursuing?
Our what we see in it is, competition has come into the mobile home park space. Even though when we started, we saw that, this is kind of really a wild, wild west of investing, but a lot of smart money has come into mobile home parks, and there's some big operators out there, in this field. So what we see is that about 100 pads and above, you're getting a lot of competition from institutional type players. And so we kind of focus on that sub 100 lot, park. And that's not to say that we won't go for a 100+ pad park. We'd love to get those, as many as we can get, of course. But we do see that the pricing and the competition goes way, way up as these lot numbers go up. And so certainly the prettier a park looks, the more expensive it is, probably just like in apartments. And, so we kind of look for that sub 100 pad lot, kind of count park. And then we also look at the park that may need a little love and attention to really turn it around. So that's kind of where our focus is right now. All of our parks have been in that range. We see a lot of value there. We feel like institutional players will come below 100 eventually, as there's only so many 100 pad plus parks out there, and they're not building more of them. So eventually they're going to come down kind of where we're playing, which is fine. But that just means we'll have a lot more buyers down the road.
Yeah, love it. And just from a geographic market perspective, or you mentioned the Midwest and Southeast, are the 5 that you currently own, are they consolidated in one general location? Where are those located?
Yeah, the majority are in the Midwest. We have one in the Southeast, and we do like the second one under contracts, in the Southeast as well. We like the Midwest. I went to Creighton University, and my partner VJ also went to Creighton. He's an attorney, as well. So we do love the Midwest because we've spent time in Omaha. We spent time in Nebraska, Iowa, all those, South Dakota. We're heavy in those states. But we do like the Southeast. I grew up in the Southeast. There's a lot of migration and, jobs going to the Southeast. So we like that area of the country. So those are kind of our 2 focuses. We do like other parts of the Sun Belt, when we look at Arizona, Texas, those are markets that are extremely competitive right now, extremely high priced, low cap rate markets. So we're not really players in those markets. We'd love to be there, but just not available to us.
Yeah. Yeah, that makes sense. Well, this is Sumeet. This has been a great conversation. I appreciate you, spending some time with us talking about, your progression from the medical field to educating yourself about real estate development, diving into real estate development, and then initially changing your focus to mobile home parks and the success you've had thus far in a very short period of time. I'm curious if you can speak to, just briefly before we start to wind down here, the challenges that you have faced being full-time in the medical field while building this other business. Like, you don't see that very often, right? Medical professionals are, work pretty demanding schedules. And so talk to us about the strategy or how you actually, just from a strategic perspective, have been able to do what you've done. Because I think that there's some listeners out there who may be in your spot where maybe they're in the medical profession, or maybe they're just busy professionals in general and are looking to make this transition into real estate. What did that look like for you?
Yeah, it takes a lot of support. I'm one person, but I have a lot of good people around me. My wife, obviously understanding, and I know you're married and you've got kids and stuff. I don't have children, so I can't even put that on my plate right now. But I know it takes a supportive environment to help anybody accomplish anything. It's not done in isolation. So having a supportive wife was very important. Having a supportive business partner. I'm a big believer in partnerships because there are talents and know-how that I just don't have that my partner does have, and vice versa, so, and relationships like that, we are very, very important to my progress. So I think I was very good at time management, as a student, as a resident, et cetera. As a resident, I was working 80+ hours a week. And, you had to have a life outside of just your job. And so when I became a full-time attending, I was working maybe more like 50 or 60 hours. So it's kind of felt like a holiday in many ways. So there was like these extra 20, 30 hours a week I had that I didn't have before. And so that's what allowed me to, focus on other things. I finally had somewhat of a life to my own. So I think it's very important to have support, family and friends. And like I said, partnerships, I'm a big believer in. None of this happens without my partner, VJ and my wife, it's just one of those things. I think you have to learn to time manage. You have to, and again, other guests have said on your show, it's about, sticking with the plan and actually taking action. And so I was one who wasn't afraid to take action. I'm still not afraid to take action. I will let you and your listeners know I have gone from full-time to part-time. This is the first year. So 2021, I officially went part-time, half-time actually, but I still work.
Your part-time is 50 hours a week?
Yeah. So I still work half-time as a doctor and, the rest of the time in our business. But, up to then I was working full-time. We closed 4 deals, built an apartment complex, all while working full time. And it's possible. It definitely is possible. You just have to strategize your time, prioritize things, see what's important to you. I had a big why, that was my thing. And if you don't mind, I'll take a couple minutes.
Yeah, please.
David. But, what was happening with me as a doctor is I was feeling some burnout, as I mentioned before. But I told you my parents were both in the real estate field. And my mother was an only child, and she went to India to take care of her parents who had become ill. And my mother's been gone for about 15 years living in India full time. And so I thought to myself as an only child, what if history repeated itself? And I one day had to leave what I was doing. Like my mother left her real estate career. What if one day I had to leave my doctoring career to go take care of my parents or just be closer to my family or whatever? And I couldn't get a job right away, or I couldn't work because I was so busy taking care of somebody. Where would I make money? And so that was one of the reasons. That was my why, was to get into real estate, was because I thought I need to have money coming in from another source other than my doctor income. And I teach I have residents that I work with now and other doctors I speak with on the phone as our investors. And that's one of my biggest things to them is there may come a day where you don't want to work as much as you're working now, or you can't physically work as much as you're working now because you're either disabled or have a family issue or something goes wrong that you're not able to work full time. How will you make money? And so that's one of the things I try to impress upon the people I speak with, our partners speak with, that, we want to give people an opportunity to find income outside of their primary income source. And so that was my big why, was just what was I going to do if I couldn't work anymore as a doctor? And it's a little fatalistic to think that way. And most people don't. But I think that was something that always worried me, because I saw that with my own mother. She was like the top broker at her real estate agency and left everything overnight to go live in India, take care of her parents. And so I thought, well, what if I have to do that? What if something happens to me? I saw friends who became disabled. I saw friends who lost their license. I saw friends who had all these situations come up that they never teach you about when you're in medical school. I mean, it's a rosy picture.
Right.
You're always be a doctor for 30 years. And you're going to make a ton of money and you're going to have a successful career, but things change and life happens. And so that was one of the things that I wanted to do for myself. So I think if you have a good enough why, you take action, you have good support environment around you, I think all those things can really lead to, doing whatever you want in real estate or otherwise.
Yeah. Well, Sumeet, I appreciate you shedding some light on that and sharing, your thought process around, why you've taken the steps that you've taken. I think that's a great place for us to end. I really just want to thank you for taking the time to come and chat with our audience. Maybe share with us a little bit about the mobile home park world and what that looks like. Sumeet, what's the best way for our listeners to connect with you, maybe learn about some deals that you have in the works, and just generally learn more about what you have going on in your business?
Yeah, so we've syndicated a number of our deals in mobile home park space, and currently we've moved to a fund model in the mobile home park space. So we're looking at investors, or talking to investors every day. So we're in a fundraising mode right now. Our website is easylivingcommunities.com. You can see kind of what we've done and what we're doing. I always give my personal cell phone number out. I mean, if that's okay with you, David.
Yeah, please.
I've always offered to people. And that's 402-850-1315. You can email me at Sumeet, SUMEET at easylivingcommunities.com. I'm very accessible. I answer my phone. I'm on my phone constantly. Emails respond to within, 20, 30 minutes most times. So I'm very accessible. I love to help people, especially professionals who are looking for alternative sources of income, and they can learn about our business in any of those ways.
Love it. Well, we'll have all that info in the show notes. Take Sumeet up on his offer, give him a call, shoot him a text, connect with him, learn more about what he's going on in his business. Sumeet, again, thank you for your time. I appreciate you coming on, and I look forward to connecting with you again soon.
Thank you so much for having me on your show. I mean, I really liked your show and I listened to it, and just big fan of what you're doing. Thank you so much.
I appreciate that.